Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 26th of July, 2021. Thank you for tuning in. I'm glad to have all you guys here. Now, what's going on out there? Well, let's get open in the charts right here and take a look at what's going on. Gold is seeing the sharpest 30-day climb since the last run to 2K. So, gold prices have settled back from last year's breakneck highs, but don't expect that to last long. Trillion-dollar government deficits and panic over higher than expected inflation is triggering a new run on the shiny metal. It says there are many signs that gold may be on the verge of another historic boom. Since March 2021, the price of gold has been rising, having already jumped 65% in the past 3 years from $11.87 an ounce to $1,836 an ounce. In addition, the reappearance of gasoline shortages and lines in some states in the United States, as well as skyrocketing commodity prices, not seen since the 1970s, have led to fears that hyperinflation may be on the horizon. Guess what, guys? If you guys watch my show, I've been watching it for a while, you know that I've been setting a forecast for a hyperinflationary event. And, I'm going to tell you guys about months and months back. Remember my shows from months and months back. These other guys were saying, hey, we're going to have this was during the time when everything was shutting down during COVID, and they were saying, oh, we're going to have a depression. And I was telling you guys, no, we're going to have a recovery. Those are two completely different things. Well, I turned out to be right, and I even gave you guys the strength of the recovery. I said that it was going to be a tepid, I used the word tepid recovery. That's exactly what we've seen, a tepid recovery. Tepid meaning it's not real strong, it's like mediocre, a mediocre recovery. That's exactly what we've seen. It's a and we're right in the middle of what I forecast way back during the initial stages of the pandemic, We're right in the middle of it, and it's exactly like I said it would be. And I told you guys that during that tepid recovery that we would have consumer inflation like you've not seen in a long time. Well, you're seeing it now. We're right in the middle of it. So we're right on track for my predictions that I said, way back then, And I also predicted a market crash that was going to be coming between January of 2022 and July of 2022. That the Fed would respond to that market crash by stimulus like you've never seen before. I mean, the biggest stimulus yet, right? Well, that hasn't happened yet. And the fact is it's going to be a very, very rough road for us to get from now to the end of this year and get into next year without having this market crash. And we might have it sooner than I expected. We could have it between any time now. It could start right up until the end of this year. It could. I still think that it's going to hold off into next year. I still think that. But we could have it sooner. And that's what I'm trying to tell you guys. Don't be surprised if we have it sooner. That's what I'm trying to tell you guys. And on the other side of that crash, so we got a crash coming up someplace in that period of time. I'm being a little bit loose about how the exact timing of the crash. But what I can tell you specifically is that after that crash is over and the Fed corrects it with massive amounts of money printing, it's going to be what's called the last straw. I mean, the dollar's just holding it together now. When they have to correct a massive market, fall in the markets and fall in the real estate and fall in everything, everything's going to collapse, start to collapse. When they have to correct that, come in to correct it, and they will, they have to, because there's no bottom there. Everything would collapse right down to the floor, and it would correct everything. The whole situation of over leveraging in the system, it would correct it all by just basically destroying the system. So they can't let it happen. They'll correct it. When they correct it, on the other side of that, that's going to be the real bull for gold, silver, and cryptocurrencies. And it's going to be more than a bull market. It's going to be panic to buy in. And gold and silver is going to be what's going to see the initial power of that, the energy of that, everybody wanting it, and they're going to disappear. We've saw signals that they're going to disappear in the silver market. We saw premiums on silver product and difficulty to obtain silver product and gold. We've already saw that. It's going to go beyond that. They're going to strip the shelves bare so that there's not even even the coins you don't even even news I can't pronounce that, numismatic coins. I can't pronounce the name, but you know what I'm talking about. Even them are going to be stripped bare. Everything's going to be gone if it's gold and silver. They're not going to care what it is. It's going to disappear. And what happens after it's all gone? All the physical's gone. You can't obtain any. The price is shooting to the moon. What's going to happen with all of that fiat currency that's left over? And they're desperate to get out. They're desperate to get out of counterparty risk. They're desperate to get out of something that's collapsing. Creates a desperation. It's almost like rats jumping off a ship. They're desperate to find something, anything to cling to try to save themselves from a currency collapse. They're going to be desperate, absolutely desperate to buy anything. Well, cryptos is going to be standing there like a sore thumb saying, buy me, because this is the only other avenue out of the dollar. And the more they buy into these alternative asset classes out of the dollar, the weaker it's going to make the dollar. It's going to be every man for himself. Once the Fed comes in and corrects this next downturn, after that, it's going to be every man for himself. And, you know, we've seen this coming for a long time. There's a lot of commentators out there who have talked about it, and they've used different illustrations to help. And I think one of the best illustrations is going to be like Niagara Falls trying to go through a garden hose. That's what it's going to be like. I can't remember which commentator said that. But it's going to be the pressure to buy out of the dollar. It's going to be like Niagara Falls going through a garden hose. The amount of money that they've created that's going to be trying to move into these other asset classes. So what's that going to do? If you're into gold and silver and it's shooting to the moon, if you're into cryptos and it's shooting for the moon after that period of time, look forward to when the Fed is corrected a monster of a market crash and faith and confidence is gone in the fiat currencies. Look forward to that time and say, well, how am I going to get out? What's my exit strategy to get out of gold and silver and cryptos if you've got them? Because that's the way we've been wired. We are wired to think that way. Hey, at a certain time we got to sell and get back into fiat. The problem with this is you might not be able to get out of your gold, silver, and cryptocurrencies because fiat might be going down so fast that if you try to step out a day later, you've lost 50%. In other words, if Bitcoin goes to 1 million, you know, or if silver goes to $1,000 an ounce, and you decide to step out and you buy into fiat, the next day that fiat's only worth half as much as the day before when you stepped out. And the silver's still continuing to shoot to the moon. So how do you exit? Well, the answer is you might not be able to. Because the fiat currencies are being destroyed. But don't worry, guys. Don't worry. They'll come up with something else. Probably a central bank digital currency. And the problem with that is that's what you may be forced into exiting into. You know, I just don't know that those to look that far ahead. It's a little bit murky. You know, but that's what you might be forced to exit into is into a central bank digital currency because they still have the power of saying what is actually used in transactions and stuff, you know, what you can and cannot use in transactions. You can't just go into a someplace and plunk a gold. You can't go into a Wendy's restaurant and plunk a gold coin on the table. Yeah, maybe one of the employees would say, "Hey, I'll take your gold coin for the hamburger." But yeah, what a great deal! A $2,200 gold coin for a Big Mac. You know, I mean, that's not going to work. You know. Anyway, let's move on. Getting sidetracked a little bit here. Let's take a look at the price of gold and silver today. It's 2 cents up for this market is a joke right here. This is a joke. This is becoming a laughing stock or a joke. It's no way reflective on the real price of silver. This is paper silver price, but it's 25.20 today for the silver price. And let's take a look at gold. Gold today is at $17.99. It's down $2.80. Cryptocurrency today is 1,523 billion. It's made a rather historic bounce. What's happening is there's a lot in there shorting the market, shorting this market. And they got over leveraged in their short positions. And basically they got squeezed. And so it drove the price of cryptocurrency up, you know. And it was up around 39,000. Right now it's 38,559. So it's not at 29,000 anymore. You know, yesterday I did a show on the Delta Report, and I said that what's crypto, basically. I talked about what crypto is going to do in this next downturn in the markets, the one that's going to trigger the Fed into action, you know, and that's upcoming, this next downturn. And I said that Bitcoin probably at the beginning of it is going to be around 40 or 50,000. Now that I saw this quick jump in the price, it might be around 50 or 60,000. Maybe a bit higher. But crypto is going to take a tumble when the markets crash. That's it. Crypto is going to take a massive tumble. And this is going to set up probably one massive buying opportunity for anybody out there. When crypto does make that tumble, when the markets fall. Because on the other side of that, crypto is going to be one of the things, and this is why I'm expecting probably by the end of 2022, a Bitcoin price that's many multiples higher of what it is right now. Many multiples higher by the end of 2022. But between here and the end of 2022, during the crash, I'm expecting it to create a buying opportunity where cryptocurrency, Bitcoin, could go below 20,000. So you're in for a rocky ride. I'm expecting in the short term here, before the crash, Bitcoin price could go as high as 60,000 or more. Right? And then fall all the way back down to 20,000 or less. And then go all the way up to like 100,000 or 200,000 on the other side of that. So can't you guys see where that would be a tremendous buying opportunity to make like 10 times coming up? And even right now, if you just had it, if you had Bitcoin, if you got Bitcoin, hang on to that stuff. Don't let go of it. Because we're going to see a price probably by the end of 2022 when the hyperinflation is coming in on us. We're going to see a price for cryptocurrency like you never believed before. But then you're going to be facing that same problem again. an exit strategy. How do you exit into a failing currency? Okay, let's move on. Dow Jones today is down 13 points on the day, 35,048. It was down more. It's bouncing back a little bit later in the day. It could end on the positive side. Let's take a look now at crude oil, 71.70. It's down 37 cents on the day, which is not a big drop. The move index today. What we're looking at is the move index is getting too high. It's starting to make me uncomfortable. This is your credit markets. And when it starts to move up to like 70, 80, and it can move up fast, you start to face instability in the credit markets when it starts to get up, especially when it gets up over 100. You know, and this thing can jump awful quick. Let's take a look now at bonds and rates, and we're looking at a mixed bag. Not much movement on bonds today. We're looking at the 10-year falling, and not even 1 basis point. It's at 1.278 right now. And the U.S. 30 years at 1.925, and it has risen just a little bit, 1/10 of 1 basis point. So there's not much movement today in bonds. Now let's take a look at the dollar index, 92.57, and we got a fallen dollar index today. And it's fell fairly substantially. 1/3 of a penny is a fairly big move to the downside. Thank you guys for listening to my show. Like and subscribe. And remember, if you've already got silver, real gold, or cryptocurrencies, hang on for dear life. Because what's coming is going to be something amazing like you've never seen before. And we got to get through this crash that's coming. And on the other side of that, that's going to be the weirdest period in human history when the world reserve currency loses its world reserve currency status and all of the other fiat currencies go down with it in a blaze of glory. You know, and it's going to be the weirdest period in human history. It's going to be where some people's fortunes are made and the vast majority of people's fortunes are lost. People who are hanging on in cash to retirement accounts and everything else, oh, they're going to get slaughtered. You know, if they've saved for retirement and they're just keeping it in dollars when this comes. We'll catch you guys in the next show, and you guys have a great afternoon. Bye-bye.